webinar. I'm your presenter, Mario Satinodoro. I am the Chief Analyst here in FinMarket, and I'd like to welcome everyone to our brand new Market Psychology Trade Without Fear webinar. Now, before we continue though, I would like you to take a moment to read our disclaimer, which basically what it states is that our opinion is just for education purpose only. So any personal opinion of me is not to be considered as investment advice made by FinMarket. Now, please have in mind that any past performance is not a reliable indicator for future results. And trading in leveraged financial instruments carries high risk of high risk and may not be suitable for investors. So in essence, here in FinMarket, we want you to be safe. So please read through. I'm going to give you a couple of seconds and we're going to continue with the presentation. Right. So who am I? I am Mario Satinodoro. I'm the Chief Market Analyst here in FinMarket. I started trading back in 2012. Now, during my time there, I was trading all kinds of instruments. I also got into trading psychology, and I have attended more than 30 motivational seminars regarding to that. I started coaching people back in 2014, and I was trading my own account too. Now, following the economic recession, I pretty much developed some algos with some very respectful people in Wall Street. We did some testing, we had some results, and from there on, I continued my career coaching people and deliver market analysis in various brokerages. Now, basically, my market approach is based on price action, but as well as market psychology. I have many articles in the following websites like Yahoo Finance, FX Street, Nasdaq, you name it. So guys, feel free to search me if you want and see my work. And if you like, follow me on my profiles on Facebook and LinkedIn as well. So let's see an overview about this webinar that I have constructed for you. Now, market psychology is the most important aspect of trading. Now, you need to be mentally prepared to be able to enter with confidence and without fear into the market. So we're going to start and scratching the surface of this amazing topic to see how one can be at least suppress some of his fears regarding the market. So I'm going to try and teach you some ways to suppress some of our feelings that basically affect us when we get into the market and the states that we are go through while we're trading. Now, a trader should also know that in order for him to trade correctly and have a correct mindset, it needs to be based on specific set of criteria that mainly will enable him or her to know how to react in different scenarios that may occur. In essence, it's to be prepared with some of the scenarios that we pre-determine may follow. So I'm going to show you some ways, some techniques, the states that one enters while the market go against him or in favor, and let's try to avoid all those things so we'll be able to think like a professional trader and not like a novice one. Now, the objective mainly is to understand how most traders think and act, understand how disciplined traders should think and act, understand how to trade without fear. We're going to present a set of rules to define a trading plan, which is the most important in this thing. Present the process of preparing yourself when different scenarios occur. So you're going to be prepared. It's like when you go to work, you need to have your strategy, how to enter a war. It's like a chess game. You need to know what might happen. Understand why we should think in probabilities, which is the keyword here is probabilities, not possibilities. I'm going to show you how to think in probabilities and how the probabilities are going to be in our favor. Excuse me. Understand how to prepare your day trading. You need to understand that you need to be prepared before you start trading. Present mental and practical exercises to progress to the next level, and present the fear and the happiness zone, which is the last but not least. And we pretty much all of us sometimes go into that. Now, I'm going to show you some things that in essence is my collective experience through the years, things that I've been through and my colleagues. It's research that I have done through the years that I've been working with many traders, customers, brokerages, and myself. And I'm going to show you different things that mainly make sense for you, some of them to avoid and some of them to embrace. All right, so let's understand first how most of the traders out there think and act. Let's start with the first one, which is the more obvious one, fear. Right, most of you are going to say, okay, fear, yeah, we know what's going on with fear. Let me just get into a more detail what is going on in someone's mind that it doesn't know too much things regarding markets, okay? So when the fear kicked in, one can be immobilized, okay? Mainly cannot act because they think that if they act upon a situation, they might end up with worse, being in a worse situation than initially been. Meaning that many traders out there, they would love to trade, but they overanalyzed the market. They divert from their trading plan because they think that the plan will not work. Okay, that's a very serious problem that we need to solve. Now, the solution to this is not to suppress, to obsolete fear, because we cannot do that. We are human beings. We need the emotions to drive us. So the only thing that we can do is to find a way to suppress fear, okay? We're going to talk about that. But for now, let's say that fear is one of the main reasons that a trader cannot click the buy or the sell button on its trade to initiate the trade, basically. Okay, so a novice trader, most of the traders out there which are considered to be novice are not going to press the button of the mouse to initiate the trade because they fear, they don't know what's going to happen. There is an unknown factor which they are pretty much afraid, okay? Or if they eventually get into the trade, most of them are going to be scared all the way through until they close the trade, right? Even though they win, they got profits from that trade. The next one is gonna still be with the same sense. They're gonna be scared, all right? So fear is the first thing that most of the traders out there have in mind when they start trading. So there is a test that has been done by Bill Williams, the legendary mentoring trader. In one of his seminars, the guy said that, okay, tell me what is the animal that can be represented as the market, he asked to his attendees. So most of them come back with something aggressive. One said it's a bear, other one said it's shark, other one said it's a snake. There was another guy that said actually he's a woman, right? So whatever make someone to scared makes sense. Okay, so that is very serious problem, because if you consider the market as a threat, then the information you receive from the market had a bias, and they are not informations that comes out from a clear and a pure analysis. It's come through a filter from fear and then to you. So you need to find a way, which I'm going to show you how, to obsolete, at least not obsolete, sorry, to suppress the fear factor. Okay. The next one is greed. All right. Many of us want to make money into market, from the market. So yeah, it makes sense to have a sense of greed inside you in order for you to be driven to get into this amazing world of trading. But when greed obsoletes all the other tasks and goals that you have, then there is a problem. And most of the traders out there, again, they put the greed filter in their trading, meaning even though they get information correctly from the market, let's say they don't fear the market, then the greed kicked in and say, okay, let's leave this trade to go a little bit more. A little bit more. In the end, what happens, most of you know, the trade turn back and either they get break even or they lose everything. The thing with this is that if you get greedy, the only problem that you're going to face is, again, the unknown, all right? Because each time you get greedy, each time you get out in a different level, meaning you don't know anymore when to get out of the market when you are profiting. You just randomly guess where to get out because you just see money. You don't see your goals and your trading plan, meaning that you have already diverted from your main target, which is, yes, the money, but you're forgetting the process. So for you, in order to obsolete, because you need to obsolete greed, is to focus on the process rather the outcome. So let's start from that and focus on the process rather the outcome. The outcome will come if the process is correct. But if the process is wrong, the outcome will not come to you. Okay, so let's focus on the process, guys, not on the end result. We all want to have fancy cars. We all want to have economic freedom. We all want to sit down in front of our computers and trade from there and not go to our daily 9 to 8 job. Okay, yeah, I get that. But in order for you to succeed, at least in some degree, you need first to learn to control your greed. Okay, now the third one, it's another serious problem that most of the traders out there think and act. Okay, so euphoria is a zone when you get in, you think that you are like a god. We have many cases like that. I've been in that situation as well when I was a novice trader. It's not that it's that bad if you can control. If you control your euphoria, okay, better. If you can control when you are in the euphoria zone, then you're gonna be able to make a lot of good decisions. Let's see how the euphoria zone, when you are in the euphoria zone, can be devastated. When someone enters a euphoria zone, again, he's not going to be focusing on his task, on his goals, on his rules, trading plan rules. He's not going to listen to the numbers that comes out from his analysis, and he's only gonna hear money. Okay, it's like greed, but it's much worse because in euphoria, you don't believe that you actually can make a mistake. You believe that you are so right because you won a stream of trades that any signal that you see on the other side, it just for you not exist. And you think that every expert out there comes out and talk about, I don't know, maybe non-farm payroll or PMIs, whatever fundamental aspect of the market or technicals comes out from experts, you think that you know better than them. Now, if you control that, if you truly control euphoria when you are in the euphoria zone, and you just get the confidence from that, then you can make miracles because you can focus on you, on your abilities, and you can take the information from the market correctly. But you need to learn how to control when you are in the euphoria zone. You don't go into obsolete that, but okay, you get the picture. Self-fulfilling tasks. Again, this is the funny one because I remember a guy said, I'm gonna get into the market because my wife wants to have fancy clothes and I want to get a better car from my neighbor. Okay, that's fine, but market doesn't care if you want to have better car from your neighbor. Doesn't care. It's just a collective society trading, and everyone tried to speculate other personal opinions. So they don't care if you want money or if you want to be successful, if you are depressed. That is your thing. Yes, you need to have some goals, but again, don't put yourself in a situation that you're forgetting about the process, rather the outcome. Okay, so guys, have your goals, write them down, have it in the back of your mind that I want to financial freedom, let's say 5 years, 10 years from now. All right, write them down, put it in a closet or in a drawer, wherever, and forget about it. Once a month, once 2 months, open the drawer and see what are those task goals that you put for yourself if you're forgetting them. Don't have them drive your whole trading career. All right, try to predict, guys, please don't try to predict market. Okay, markets are random. You need to learn how to get the information correctly from the market, put the probabilities in your favor and go for it. Don't try to predict. This is not a weather channel or something like that. If someone comes and tell you, I know exactly where the market is going to go, they're lying. No one knows what the market exactly will go. We know the direction of the market, we know the trends, but we don't know where it's going to get in or out, or if it's going to take out a stop loss, or we don't know that. So if you don't try to predict the market, then you're going to obsolete fear. I'm going to explain that later. And please do not live and die on each trade. Okay, I won, yeah, I'm the king of the world. I lost, oh my God, I think I'm gonna kill myself. No, please don't do that. Many people, they think like they live and die for that. That's terrible, guys. Okay, please don't do that to yourself. Don't live and die for each and every trade, rather than take your trades objectively, take your trades like your trading plan states, and then see the results in the end. And then you can decide if that strategy is good or is bad. That's it. It's not your fault. It's not market's fault if something goes wrong. It just didn't happen because the situation in that time were different from your strategy parameters. Okay, guys? So let's go now and see how basically a disciplined trader, think and act, should think and act. We have act, meaning define your edge, so you're gonna be able to act. Let me explain myself. When you define your edge, when you know in which area you are good at it, then you can act upon a trading plan and have a result. Meaning that if you think that you're going to take a strategy, a random strategy out there, start trading that, and bam, you are successful, think again. A better solution for that is for you basically to learn more about you. That's the fourth one. But I'm studying right now because it makes sense. Learn more about you guys. Find out which are your edges, which traits that you have inside you are good for what. So you can take a trading strategy, and you can tailor that strategy in your preferences. Meaning, if you're an aggressive trader, for example, you can pick something aggressively, or you can pick something that is conservative and change the money management plans. Okay, there are so many variations that you can do, which most of them I'm gonna teach in my next webinars. Okay, so for now though, have in mind that define your edge is the one thing that is gonna make you distinguish yourself from other traders. It's gonna help you act, it's gonna have you being confident, and you're gonna have more energy to work with markets when you know actually what are your abilities are, and when you know actually what you are doing, right? Then you need to have a trading plan. Come on, guys, you don't open a business and you don't have a trading plan. Most of the traders out there, they don't do that. They don't treat their forex business like a business. They treat it like a part-time job. Now, if you want to do that, you need to do it professionally. You don't go and open a shop, for example, and you don't know your expenses, your taxes, your mortgages. You need to put all that down and see what it needs to be done in order for you to have a successful career, because a trading plan is the route from the beginning to the end result. Now, everything is going to come, basically, they are going to come together now when we talk. Now, beginning, outcome, focus on the process and not the outcome. Okay, that is what the trading plan will do for you guys. It's going to make you stay in place, stay disciplined, which is the third one that you need to have, the discipline rules. So if you combine trading plan with discipline rules, then you pretty much gonna be 65, 70% bulletproof, right? Because now you have a trading plan, you know what you have to do, and then you have the discipline rules that they are going to help you stay disciplined in your trading plan. They're gonna help you stay focused in the process and not the end result. But they also gonna show you how probably the end result will be if you are disciplined. Okay, so discipline rules. Fourth, we already talked about that. Learn about yourself. Again, don't try to predict. This is what the disciplined trader do. They don't try to predict. They put the probabilities in their favor in order for them to have more probable ways to trade and not possible ways to trade. And define your risk. All right. Many will say, yeah, I know my risk. Yeah, I believe that most of the traders out there know it's a risk. They say, all right, I'm gonna trade and I'm gonna have, I don't know, 1% of my account, for example, as my risk tolerant. Okay, I know that. Most of us, we do that. How many of us, though, they mainly not only define the risk, but also embrace the risk? How many of us we do that? How many of us are we are willing to actually lose the 1% of our predetermined risk. Many of us, they just put the definition there to self complete our ego, like, you know, I just defined my risk, I'm okay. But when the time comes for the trade to hit the stop loss, we just don't accept that, and we move our stop loss lower or higher and higher or lower, and eventually we divert from our trading plan, we divert from our discipline rules, we get into the fear zone, and we need and eventually lose more than our trading plan was stating. Define your risk, embrace your risk, because guys, you don't know if the next trade will be the one that's gonna win or the one that is gonna lose. So don't take the risk beyond the definition of your risk. Okay. Let's see how we probably can trade without fear. Okay, that's the meat of our presentation today. First of all, you don't need to have expectations from the market, guys. Picture this. You get into the market, you don't have any expectations. If the market is going to go up, or if the market is going to go down, or if the market is going to give me money, or if the market is going to take money from me. If you don't have expectations when something is happening in the market, then the information that you're getting are not biased, meaning that if something happened in the market, which is positive or negative, you don't care. You just go with your trading plan like a robot. You don't have expectation. Because let me give you an example of a scenario. Someone get into the market, he heard a lot of news today, he come pumped up into the market stating that, listen, I don't care, the market's gonna go up, I'm gonna put my plan in place and my strategy to fit basically my trading strategy into my bias, because I believe the market is going to go up. So what I'm doing now is basically obsolete some of my trading rules. Okay, I don't care if the two lines of the moving average cross or not. I don't care, because I think the market is going to go up. So the market returns is going down, and then you are devastated, because first, the market didn't do what it's expected to do, because you knew that the market is going to go up. Oh, poor you. The second thing is that you divert from your plan, and then you feel guilty because you divert from your plan. So again, isn't it not better for us to don't get any expectation from the market? So you just go with the flow, see what is going on with your trading strategy, see all the rules that you have, and then act upon that. Don't try to trim your trading strategy that you've been testing for so long, because you just have a bias for the day. Okay, stick to your rules. That's the key. Now, learn to trade objectively with not external factors interfering with your trading plan. That's the second thing, guys. Now, let's take the opposite side now. A guy comes into the market, has no expectations, he's perfect. Okay, so he gets into the market, and then he heard a rumor about, let's say, for example, Bitcoin is gonna go, I don't know, how many thousands. All right, so I didn't have any expectations now, but now I have. I expect the market to go up because an expert came out and say it's going to go up again. I'm taking objective decisions based on subjective statements, because I don't know if that guy has a bias or if he get paid to say something like that. We don't know. That's why you need to stick with your plan. If you maybe your plan says otherwise, maybe you trade. Let's take an example of an indicator, which is great. I'm gonna teach you about that in the future webinars. Ichimoku Kinko here. Okay, that one maybe is telling you that the market for now is going down. So why go against your trading plan again? Because some guy says something. Control that. It's good to have all the information come in. It's good to have objective information gathering into your mind, but you need to know when these informations are going to affect your decisions. You cannot eliminate your emotions, just learn to control them. Like I said before, we are human beings. We are driven by emotions. The emotions are the one that get us motivated. We don't want them to be obsolete. We want to have some kind of a fear inside us, okay, so we don't get crazy, but we need to learn to control them. If you learn to control the emotions that we pre-stated, which are mainly negative, then you can have a positive outcome from them. Because if you have this emotion, you have them for a reason. No one can tell you to obsolete them because the nature equipped you with those emotions, because mainly nature is cleverer than us. So don't try to cheat nature, just learn to control them. If you learn to control them, you can do a lot of things, not only in trading, but in any area of the life of your life, like most of us in the professional field, we did, because we needed to actually take a step further for us to be able to trade objectively. We have to restructure some of our thinking process. Okay, learn how to trade in sets of trade and then calculate your results. So let's take the fourth and the first and let's put them together to see the outcome. Have no expectation from the market. Learn how to trade in set of trade, because you don't know if you trade 24 trades, for example. You don't know which one of those 24 trades are going to be the profitable and the losing ones. So take the first and the last in the end, and then calculate your results and see if the results are better than the losing ratio, so you can proceed with that specific strategy. So I just gave you two things that basically are going to suppress the fear factor. Have no expectations, so I don't care what's going to happen with the market, just go with the flow with my trading plan, and then learn how to trade instead of trades, and then check your results. So from the 1st until the 24th, 24 is a subjective number, do whatever you want, the 1st and the 24th, from that point to the end, I don't care what's going to happen. If it works, it works. If it's not, I'm changing my trading plan. And let me tell you this, I'm going to show you how many strategies are out there that you can test, and you can test it. You have demo counts that you can test. Take a month, test the one, take another month, test the second one. You see how easy it is to don't lose money in the markets. You have demos, or maybe you have $100 or $200 to spare on your testing. Guys, out there are companies that they are paying people to take surveys, thousands of dollars each day, to get the data they want. So I don't believe that there are people out there that they don't actually spend $100 or $200 or $300 to construct a strategy that is gonna make them successful in their career, and they just going out there in the field with no clue what's going on, and they believe that they're gonna be the best. So guys, have no expectation from the market. Learn how to trade in sets of trades and not in individual ones, and test your system and your method, and don't see the market information as a threat. This will help you trade objectively. We don't care how the informations are going to be incorporated in our mind. We don't care. We just don't want the threat. We want objective information coming into our brain so we can filter them without any bias and then get the outcome. don't filter them first with the fear and then come to you. If you know what I mean, don't put your fear in front and then take the information from the market, because they're going to be wrong. Key points: trying to learn more about you. That's the key. This is what I always say to my students. Don't go out there without knowing yourself. Don't try to find a holy grail. There isn't any. All right. Don't put thousands of indicators on your charts. It's not going to work, guys. I've been there. Okay. So try to construct a solid strategy, maybe with your indicators, maybe without, but don't try to find something that is going to predict the market for you. Don't blame yourself for losing in case you're following your own plan, because things happen in the market, things that are not predicted. You can't predict them. You don't want to go into that route. Probably we are trading the expectations of other traders. That's one of the key points that I want you to put in your mind. If you are trading expectations of other traders, how you can predict if one trader getting into the market today is stating something that is completely different than the previous day? Because we're not robots, we are human beings. So if we are trading expectations of other traders, how can we predict the market? We can't, because each day is different from us, for each and every one of us. Each day we make different decisions based on different things. Each day, each trader, even if they're following their own trading plan, they are trading differently. So you can't predict the market. You take the information collectively, you distill them, and you see if that information are suited with your trading plan, and then you act. A set of rules is that is going to help you to define the trading plan. Basically, you need to study a strategy thoroughly. You need to do your proper trades to refine your entries. Do some demo trades, guys, to become self-confident before you enter the market. That's a crucial thing to do. Do a set of trades. That is what we said before. Mainly, you need to track your trades. You need to track your emotions. You need to have a reason to get into the market, because most of us go into the market without having any reason. We need to have a reason, and the reason is our outcome. We need to have the outcome, but to reach the outcome, we need the process. Everything comes together now. Now, the reason to do this, all of these things, is not to see if the system works for you, if the system works, but if the system that you are using, talking about your strategy now, works for you. You need to know if the strategy works for you. For example, if that system stresses you and you're not going to be able to enter into the market, that means that system maybe is not for you, or maybe you're not ready. Let me show you a schematic here. Let's say that you're losing. Then you need to relax and go to your next trade. Let's say that you're consistent losing. Then you need to evaluate your mental health to see if you're okay, or that day if you're not stressed or something. And then you need to check your system. Let's say a different scenario now. Let's say that you're leaving money on the table, meaning that you get out too soon. You need to evaluate your mental health again. Maybe you're too stressed, or you maybe need to lower your size, your lot size, because you're afraid if the market comes down, you're going to lose a lot. So maybe you need to lower your lot size so you're going to be comfortable when the market comes against you. Let's say that you have 24 consistent wins. Again, evaluate your mental health and just go to the next 24 set of trades. When this 24 is, again, is a number that suits for me, maybe for you is 10. Go to the next set. If you have those consistent wins, then you go to the next level, the next set, and the next, and the next. When the next set stops producing, then you may consider to see what's going on, okay? Understand why we should think probabilities. The reason to see probabilities means that you're trying to eliminate the possibility. So probability in our favor means that you have probabilities for us to be on the winning side. not in the possibility side, because possibility is for gambling. Okay, probability is for analysis. We need the probabilities in our favor. Okay, so let's see now. You need to understand that in the market, you need to have weaker emotions and more probabilities. Makes sense, doesn't it? You need to have that. So please have more probabilities rather than emotions. That will help you a lot. And a potential trade mainly is a set of probabilities. So if you have a potential trade in place, that means that you have probabilities in your favor and you need to go through that. Okay. Prepare your day trading. Prepare your day for trading. So create a list of mental exercises. You need to do that. Okay. Print them, check them. Try to motivate yourself before you open your chart. Obviously, you need to be motivated in order for you to do your trading. Check your major news, obviously. Open your chart and check the technical analysis. That's a procedure that you need to understand, that you need to do. Have a list ready when your set system with your set system criteria, meaning that you have when you have a system, you need to have a checklist again. That's it's mainly custom made. You can do whatever you want here. Okay, it's like your own rules, but you need to follow them. And what I want you to do is keep a record of all your trades. That's a must. So who we are? We are FinMarket. FinMarket basically it's a brand that is owned by KDNA Financial Services. We are brokers. We offer deep liquidity and unique transparent trading model. We are mainly SISEC regulated, meaning that we are compliant with most of the European laws out there. We support and encourage your trading success. That's why we do this webinar. We don't trade against the interests of our clients and leverage amount for further trading liquidities, but we recommend you go to the SISEC site and take a look of the KDNA, our site, and see who we are. Like we said, we are brokers. We try to educate ourselves. We have many experts here that they are willing to help you. Go to thefinmarket.com. You're going to find a lot of information there. We have everything that you need. And please join us for our next webinar, which is going to be on the 25th. We're going to talk about a lot of things. You can take a look at the next site and find out what's going on there. And I'd like to thank you so much about your attention. You've been, as I can see from the registration, I can see that you've been an amazing audience. Thank you very much. And I hope a safe trading career for you guys. Bye-bye.